Hi, I'm Battu from FreeFinCal. So let's finally talk about the Zerodha multi-asset passive fund of fund. So many people have commented about this, written to me, or mentioned it in social media, etc. That I'm a little surprised. So it reminds me of a little child asking their parents, "Mummy, can I buy this?" So I think investors should stop and dig deeper, look at the scheme information document, understand the nature of the fund before concluding that it's a great fund, or it's a one fund portfolio. They can just buy this fund and not worry about asset allocation, not worry about the rebalancing, etc. I think some basic understanding is still lacking, and I would say, um, I think it's because they don't want to do the effort. And for some reason, I'm not sure why. That's the reason why. So let's talk about it. First of all, you should understand what is the difference between a passive fund and a passive fund of fund. A passive fund means that it will invest in bonds or stocks and track a particular benchmark. That passive fund can be an index fund or ETF. A passive fund of fund means it is a fund that will invest in other passive funds, ETFs or index funds. But the passive funds in the portfolio can change from time to time. So that can be actively changed. There will be some active management to change the underlying ETFs and index funds. Also, a passive fund of fund will not track any benchmark. Therefore, when I keep saying that we need a aggressive hybrid index fund, I've been saying this for a long time. Many people write, can this passive multi-asset fund of fund be an answer to the aggressive hybrid index fund or a hybrid index fund that you've been saying? The answer clearly is no, because the passive fund of fund will not track any benchmark. I am talking about a aggressive hybrid index fund which will track a aggressive hybrid index by directly investing in stocks and directly investing in bonds. So this is not an answer to what I have been saying. So please appreciate that before we go forward. So this Zerodha multi-asset passive fund of fund uh, just started a few months ago, and it has got a current AUM of about 30 crores. And the asset allocation mandate of the fund is it can invest in domestic ETFs or index funds between 50 to 70%. Domestic debt ETFs or index funds between 10 to 20%. Commodity ETFs, it can be gold or silver, 20 to 30%, and debt securities and money market instrument about 5%. Now, if you look at the current portfolio, when we are looking at the video now, it holds about 25% of gold ETF, about 30% of Nifty 100 ETF, 15% of Nifty 8 to 13 year GSEC ETF, and the about 30% of Nifty Mid Cap 150 ETF. The expense ratio for just holding this is 0.18%, which is a very high expense ratio for a fund of fund. You must understand that, of course, all fund of funds in India will have such an expense ratio. I'm not saying only this has got it. The underlying funds, if you look at it, the gold ETF has an expense ratio of 0.32, the Nifty 100 has an expense ratio of 0.25%, the GSEC ETF is 0.07%, and the mid cap ETF is 150%. Mid cap 150 is 2.21%. Now, if you take the weighted average of the TERs, the total expense ratio, it will be about 0.22% plus the fund of funds expense ratio of 0.18%. Now, for managing a GSEC ETF, you need only 0.07% as expense ratio. But for just investing in ETFs that you already own and you are going to rebalance from time to time, you're not going to rebalance regularly. The fund house makes it very clear that they will not rebalance unnecessarily to reduce cost. They will only rebalance if the asset allocation moves away from 5%, from the target asset allocation. If it moves away from by 5%, only then it will rebalance. So it's not going to rebalance a lot of often every month or even every quarter. It only rebalance when there is a need to do so. just for taking our money and investing in your own ETFs and for rebalancing it from time to time, which is basically a very passive approach. Why do you want 0.18%? That's a huge expense ratio. And come on, and you must understand that the fund can invest in other ETFs also. There's a big list. We'll come to that. Now, before we do that, we have this benchmark. This benchmark has got 60% of Nifty 200 TRI, 15% of CRISIL 10-year gilt index, and 25% of gold. Now, Nifty 200 is about 80% large caps, approximately, because of the capital market capitalization based weighting. The benchmark, so approximately has about 48% large cap because of the 60% weightage. So the fund has about 30% large cap. The benchmark has 48% large cap. The fund has got 30% mid cap. The benchmark has got only 12% mid caps. So the fund will not, like I said, it will not track the benchmark. Sometimes it will outperform the benchmark. Sometimes it will underperform the benchmark. So this is not really a passive fund. And if you look at the possible choices of underlying funds, look at this huge list. There's a big list of all these funds. You can also see there's a Nifty Next 50 index ETF in it and so on. So the big list of where it can invest. So there will be an active selection of which ETFs to invest, and the fund manager can also change the underlying ETFs, or they can add underlying ETFs. So there is a complete freedom in doing all this. So it is not really a passive fund from that sense. You must understand that it's a passive fund of fund, but not a passive fund like I mentioned. Now let me list 3 reasons why one does not need to invest in Zerodha multi-asset fund of fund. Now please understand, when you are a fund of fund investing in ETFs, the NAV of the fund of fund will track the price of the ETF. Now, if you go to a portal like Value Research, you can see the NAV and price disparity for an ETF. How closely the NAV of the ETF follows the price of the ETF. In the case of Zerodha ETFs, except for the Zerodha Gold ETF, the Nifty 100 ETF, the Nifty Midcap 150 ETF, the Nifty GSEC ETF, all of them have very prominent, noticeable price NAV disparity. And this disparity will come and manifest in the returns of the fund of fund, because these are all low AUM ETFs and they are very new ETFs. Not many people are trading in it. And therefore, this is a additional unnecessary risk of investing in an ETF. I would say avoid all ETFs because of the management, because of we don't know which funds they're going to invest in and when and why. And there is this ETF price issue that the NAV of the fund of fund will track. Now, also, investors should grow up. They should understand that you cannot shy away from responsibilities of portfolio management, of asset allocation and rebalancing from time to time, and say, I will just invest in one fund and everything will be done by the fund house and I'll just simply be happy. That is just not going to happen, right? Today, the fund looks very promising to you because the fund has got 20% of gold or whatever, 25% of gold, whatever it is. But when gold starts falling down or silver starts falling down, then it becomes different. Then the fund will not become so rosy. So you must understand that you must have a proper goal based asset allocation and goal based risk management. You cannot simply buy one fund and say they will take care of everything, I will not have to pay tax, I don't have to rebalance. That's just immature. And thirdly, most people who are asking me, can I invest in Zerodha multi-asset fund of fund? They will already be holding one or two funds. If you are already holding one or two funds, why are you interested in this? It's again, I mean, childishness in my opinion. There will always be some fund which looks more shiny, which looks more bright and flashy than the funds that you already have. The mutual fund industry will keep coming up with new products that they will claim is the answer for all your problems. But that doesn't mean you should, buy it. You are only going to clutter your portfolio. Please stop buying more funds. That is the biggest help that you can do to your own wealth. Buy one or two funds, whether they are active or passive, does not matter. Just buy one or two funds and stop buying anymore. The day you stop buying new funds, that is the day you have reached the next level, in my opinion. And then let your wealth compound by investing aggressively in it. This is not a one fund portfolio. This fund is too risky. For me, a passive hybrid fund or a passive aggressive hybrid fund will have 60 to 65 to 70% of large cap, either from NSE 200 or NSE 500, something like that, and 30 to 35% of mid cap with medium term bonds. That is neither too neither short term nor too long term. Both of them have problems in the long term in terms of returns. Something medium term incomes in terms of like give you reasonable risk and reward, balance of risk and reward. And that is the kind of hybrid index fund that I'm talking about. Such a fund at the time of making this video or writing the article does not exist. We are still waiting for the aggressive hybrid index. So, but don't wait. You have your own goals. Your goals are not going to wait. Please create your own portfolio. Have your own, portfolio management rules and follow them. You can't simply buy one fund and forget about it. Bye bye.